Good day everyone! For today's video, I'm going to discuss on how to present the company's financial statement. There are four types of company's financial statement, namely, statement of financial position or the balance sheet, statement of comprehensive income and expenses or the income statement, statement of cash flow, and the statement of changes in owner's equity. For my first example, I have here the 5-year consolidated financial position of the given entity. Balance sheet presents financial position of an entity at a given date. In preparing the company's financial statement, we should first start with the title. So, the title composed of name of the company, the type of financial statement, and the year ended of the given entity. So for my example, I have here the Red Ribbon Bake Shop Incorporated Statement of Financial Position for the year ended December 31, 2013 up to December 31, 2017. So for the financial position, it is divided into two main elements, the asset section and the liabilities and shareholders equity section. On the first column of the financial position is the account titles of the given entity, while the other columns are the year from earliest year up to the latest year. So in asset section is divided into two main parts, the current assets and the non-current assets. The current assets are the short-term or the assets that are quickly convertible into cash. The asset section is listed according to their liquidity or how they are convertible into cash. See, for my example, I have here the current assets listed, the cash and cash equivalents, receivables, inventories, other current assets. We need to total the total current assets of this. While on the other hand, the non-current assets is the long-term. We need to total these to arrive the total assets of the given entity for the 5-year consolidated financial position. On the next section of the financial position is the liabilities and shareholders equity of the company. On the liabilities part, the accounts are listed according to their payment. So, the liabilities is divided into two parts, the current liabilities and the non-current liabilities. On the current liabilities are the accounts listed for their short-term obligations. These are, for example, the trade payable and other current liabilities, income tax payable, and due to parent company. We need to total these current liabilities. On the other hand, the non-current liabilities are the long-term obligation of the company. In this example, I have here the pension liability, operating lease payable. We need also to total these non-current liabilities to arrive the total liabilities of the given entity. The last part of the financial position is the equity of the company or the retained earnings included in this account. Also included in the equity is the capital stocks and the remeasurement losses on net defined plan net of tax. We need also to total the equity to arrive the second main section of the financial position, which is the total liabilities and shareholders equity. After getting the total of these, it should be balanced with the total assets of the given entity, and we are now arrived with the financial position of the given entity. That's the 5-year consolidated financial position of the Red Ribbon Bake Shop Incorporated. On the statement of comprehensive income and expenses, the revenue appears first on the first column. This includes the net sales, royalty, franchise, and others to get the net revenue of the company. By subtracting the cost of sales from the net revenue, we will now arrive at the gross profit of the given entity. After which, it is followed by the expenses. It is followed by the expenses and break down all the expenses of the company to get the operating profit, which includes in the comprehensive income and statement. After which, we will now arrive at the other income. Listed here are interest income, interest expense, and other income. After adding this, we will get the earnings before income tax of the given entity, in which the provision for income tax is the total income tax by adding the current and the deferred. By subtracting the total income tax from the earnings before income tax, we will now arrive at the net income of the given entity for the 5-year consolidated financial position. The other comprehensive gains and losses are also part of the comprehensive income and statement, and we should break down all the account titles according to their payment. So here is the total comprehensive income of the given entity for the 5-year consolidated financial position of the company. For my next example, I have here the statement of cash flow. Like in the balance sheet and the income statement, the title is like this: name of the company, the type of financial statement, and the year ended of the accounting cycle. So, the cash flow statement acts as bridge between the balance sheet and the income statement on how the money is moved in and moved out of the business. The cash flow statement is divided into 3 main elements: the operating activities, the investing activities, and the financing activities. And the operating activities, this is the revenue generating activities of an organizational and other activities. It is the first, it should be the first in the financial statement of the statement of cash flow. So from operating activities, we should break down all the account titles like this. And the next column is the 5-year accounting cycle of the given entity, from the earliest year up to the latest year. In operating activities, we should all add this account title to get the operating activities of the company. So for the next element of the statement of cash flow is the investing activities. Investing activities is any cash flow from acquisition and disposal of long-term assets and other investments included in the cash equivalents. So in the investing activities, we need to break down all the account titles like this, and we need to total all of this to get the net cash used in investing activities. On the other hand, the cash flow from financing activities is the cash flow that results change in the size and composition of the contributed of the entity. Like in operating activities and investing activities, we need to add all the account titles from the financing activities to get the cash flow from financing activities. In a nutshell, these financial statements are very important, not just to the investors, but for us students who are making financial plan. This is our basis in gathering all data to make a concrete analysis in making the 5-year consolidated financial plan. That's my lecture, and thank you.